Welcome to the Techno Fundamental Report for June 27th. One more day till the end of the quarter. Benjamin Franklin, what a great American. Went over to France, negotiated with the French to help us with the revolution. I really believe the key to us winning that war was the invention of the printing press. It was like social networking, but Franklin was a genius printer and was very, very good at it. He wrote a book called, or it was an almanac called Poor Richard. No gains without pains. I really think speculation is so important to understand because I run across people all the time, and I'll talk about the Stanford situation that we had here, actually in Baton Rouge. They hit us for about $1 billion. A lot of people lost a lot of money, but they promised no speculation. They promised these CDs from a bank in Antigua, and it was just easy money. Well, I just got to tell you, that's the wrong idea. On Bernie Madoff, it was so interesting because he says, it's a proprietary strategy. I can't go into it in great detail. In other words, you got to be a know-something investor. You got to know what you're doing, and you've got to keep an eye on things. Now, the trade-off with stocks is you get the benefit of speculation, but at the same time, now realize when I say speculation, I'm not saying gambling. Now, gambling is where you create a risk that did not exist before. Speculation is like spectacle. It's like seeing. You're trying to see the future. You're trying to understand what's going on. But the trade-off with stocks is that you get liquidity, which I think is the most important aspect of stock market investing. But the problem comes in with volatility. So each year sees more than 7 different 3% dips. More than 3 times a year do stocks correct 5%. About once a year, on average, about a 10% correction. 15% corrections come along about every year and a half, and a 20% bear market almost every 3 years. So you can see how this graphically plays out. You're going to have volatility. It's just a fact of life because you're dealing with an auction market. And, you have buyers and you have sellers, and sometimes the sellers outnumber the buyers, and that's what's caused the downward volatility. Then if you've got more buyers than sellers, just the opposite. Now remember here, the long-term plan or the long-term speculation is that consumer spending, which is so critical to our economy. Our economy runs on 2 things, consumer spending and credit. So if you realize that consumption is important, you've got to have a population that consumes. So if you're in a country that's got a lot of poverty, you're not going to have a lot of consumption. Well, fortunately, we don't have that. And so I keep referring to this, but the millennials and the Generation Z children or kids or young adults are going to drive speculation. My daughter Amy just turned 37. She's bought a home. She's gotten married. She has 3 dogs. She's consuming. Just something to be aware of. Now, let's take a look at the market here. My greatest concern right now is the fact that the market is so narrow. A really healthy bull market is where it broadens out. So this is the advanced decline line. It's a very simple indicator. It's basically saying on the NASDAQ, is there more stocks advancing or is there more stocks declining? And as you can see here, the advanced decline line is hitting new lows. This just isn't a positive. I wish I could say it is, but you've got the NASDAQ hitting new highs on fewer stocks. Maybe it means something, maybe it doesn't. I just would prefer to have a broad rally. Now, on taking the new highs on the NASDAQ and I subtract from it the new lows, you can see here it's also somewhat breaking down. There's just more new lows than new highs. Now, on the stocks above their 50-day moving average, now this is on the S&P. You can see it's, the S&P is hitting new highs, but at the same time, less than 50% of the stocks are above their 50-day moving average. Again, it's all because of this deception of these market cap weighted indexes. I don't know why they do it this way, and it puzzles me. So we'll look at some market cap weighted indexes, but also want to look at some equally weighted indexes. Now this is an equally weighted index. This is the Value Line Geometric, and it's a very large index. It's 1,700 stocks. It's just virtually going nowhere. So this is my big concern right now. So stock selection is critical here because you've got to find the ones that are participating in the bull market. Now let's take a look at our three economic indicators. You can kind of see here with interest rates, we've somewhat stabilized in this area below the 200-day moving average. Oil prices have been heating up a little bit. We've gotten back above $80 a barrel. Financial stocks are just basically moving sideways, which with the banking industry, especially the smaller banks, that's somewhat of a positive. Now, I wanted to also mention the importance of a stop loss. You know, when you buy 10 securities or 10 stocks, you're probably going to maybe be right on 6. And that's if you're good, and that's if you're in a bull market. And this is what Peter Lynch says. So when you have something in the portfolio that just isn't working, you've got to man up or woman up and take defensive action. This is a company called Fastly. We actually were involved in this stock back in 2020. It ran up to almost $130 a share. It's currently at $7 a share. So you needed to, you can see the extreme volatility in here. So basically that would have been a warning in itself. But you had to use, if you got involved in this stock in this area here, you needed to be stopping out and you need to keep your losses small. Now realize when you take small losses, you're building up something called your tax bank so that when you do hit a good one, and you do make substantial capital gains, you can offset those capital gains with loss carry forwards from your tax bank. Makes sense. Home construction, I'm just noticing here, this is an ETF on the home construction stocks. They're just not looking good. So I just wanted to point that out. The housing stocks are having a tough time here. Again, back to the small caps. This is the Russell 2000, which is the smaller companies, divided by the S&P 500. So we get a ratio. This ratio is hitting new lows. So the S&P and the NASDAQ are pretty much outperforming all the other indexes because they're market cap weighted and it's so narrow. So let's just take a look at this. This is the NASDAQ here. I've got it set up this way. I've got the 25-day moving average. I've got the 50-day moving average. I've got the 200-day moving average. You got volume down here. Plus, this is our trend meter. So you can see here, NASDAQ looks pretty darn healthy, actually hitting new highs, but it is very concentrated in just a few names. So let's go to another index. This is the mid-cap stocks. This is the S&P 400. You can see here, it's not looking anything like the NASDAQ. It's actually breaking down below these moving averages. So if we look at the small caps, you can see the same problem. We've broken down below these moving averages. We're just not getting broad participation. It is a concern. I may not have this may not be a problem. It could be different this time. But usually when you see this kind of action, it usually means that there's some type of change of character, which could either mean a pullback in the market or it could mean just rotation. And I will say we are seeing rotation, where you rotate out of one group of stocks into another. Now here's the S&P 500, just like the NASDAQ, above the moving averages. It's very solid, but it's market cap weighted. Now here is an equally weighted S&P 500. Doesn't look anything like the market cap weighted. So again, we're dealing with a very narrow market. Stock selection is critical here. So if you have any questions, please let me know. Thank you very much.